Welcome to The Roll Forward, a podcast for the next wave of finance leaders, especially those looking to transform their roles by making smarter, faster, and more profitable business decisions using the power of technology and a forward-looking approach to finance. Listen in to learn how to get out of the back office trenches and become a more strategic partner within your organization.
Hello and welcome to another episode of the Roll Forward podcast. My name is Joe Michalowski, and this episode is brought to you by Mosaic, a strategic finance platform that transforms the way business gets done. And today, I'm very excited to have our guest, Ben Murray, otherwise known as the SaaS CFO, on. I've been a leading voice in the SaaS finance space for like 10 plus years. If you work in the space, you probably know who he is. So Ben, just want to say thank you so much for joining me today.
Hi, Joe. Yeah, great being here. Thanks for having me on.
Awesome. So, maybe unlike some of the other guests we've had on, maybe this isn't as necessary, but I'm going to ask you the same thing we usually ask people. And that's like, before we start, do you mind giving us the quick background on yourself, the work you're doing at the SaaS CFO, kind of how that started?
Sure. Yep. I'm a CFO by trade. So of course, been in finance and accounting my entire career in the airline industry. And then I got into the software industry back in the on-premise perpetual maintenance days. Now operate a site that I started maybe 7 years ago, the SaaSCFO.com, where sharing my knowledge on SaaS finance, metrics, accounting, bunch of templates, forecast models. So came up through the ranks of FP&A, became a SaaS CFO at founder and private equity backed businesses. And now about 12 months ago, started my own services offering, fractional coaching and also teach courses on SaaS metrics.
Nice. The airline part, I did not know. That's really interesting. Maybe a story for another day, because I know we've got stuff to dig into, but, love to get that background. And congrats on doing the services now. I didn't realize that you were doing the fractional CFO bit, so that's really cool too. Awesome. Well, try to, when we have people on the podcast, dig into like a more specific topic than just asking more questions about your career. And so when we were going to have you on, I went on SaaSCFO.com and I checked out the website. The last couple articles were about customer acquisition costs. And so I thought we could dive into that and do like a CAC Masterclass, if you will, as we chat today. So one thing I saw that you wrote about that I haven't seen anywhere else when I read about these things is the idea of like a CAC profile. I just haven't seen that term before. So can you explain what you mean by CAC profile and like why that's an important way to look at it?
Sure, right. We know CAC is a ubiquitous SaaS metric. So thinking about it, there are a lot of different sales and marketing efficiency metrics. But I look at all those in context because metrics in isolation don't mean much. We need the metrics around it, that context, to really understand that full picture. And that's where I came up. Well, what about how do I look as a CFO in my experience? How do I look at CAC and sales and marketing efficiency metrics? And really, you're creating a profile for the business around CAC, and a lot of different metrics make that up. So again, it's providing a lot of context, looking at all the sales and marketing efficiency metrics and trying to interpret what story is that telling for our business.
Love that. It's ties in really well with the work we do at Mosaic. It's kind of the whole spiel for our company is that like, you don't just get the one metric spit out, like here's your customer acquisition cost, but you get it in full context. So completely on board with you there. But I feel like you come to that conclusion based on some experience in maybe miscalculations with CAC or ways people have gotten it wrong. So I'm curious, like in all of your experience with all these different SaaS businesses, what are some common ways that people get their CAC calculations wrong?
Yeah, this is one of those things with SaaS metrics where you think, oh, CAC, simple concept. Say
Easy.
sales and marketing expense divided by new customers. One, super simple. But some things that always come up with calculating CAC correctly or incorrectly is fully burdened costs for sales and marketing. For example, wages, taxes, benefits. Sometimes people are just posting wages to sales and marketing cost centers, have benefits, say, coded and taxes down in G&A. So the big thing is the fundamentals of CAC is just having fully burdened cost centers. So all the wages, taxes, benefits, travel, paid ads, swag, whatever it is, all those expenses attributable back to sales and marketing. So that's one big thing is just making sure it's a fully burdened cost centers for sales and marketing so we can get the CAC calculation correct.
Yep.
Then as we move along, sales cycle becomes a really big deal. So it's like, what time period are we measuring for CAC? Is it 1 month? Is it 3? Is it 6? Is it 12? And we have to align that to our sales cycle to make the CAC calculation and other sales and marketing efficiency metrics a more valid metric. So those are the big things that come up when I teach courses, talk to founders and finance teams. And then a little, new versus existing allocation that would write as well.
Gotcha. I'm curious, just because, a lot of people that come on, they have their experience, maybe like a handful of companies. You get to work with a whole bunch of different
Mhm.
people. You see experience coming in from all different corners of SaaS. In my head, I can picture this like horror story of spending months calculating CAC wrong and then going into a board meeting and trying to present it and then suddenly realizing like mid presentation, somebody grills you on it and
Mhm.
it's wrong. I'm wondering if you have any horror stories, any times you've seen where people like just didn't have this calculation quite right and maybe like the negative impact that has on a business, like why it's so important to get this correct.
Yeah, because that's what keeps CFOs up at night is that presentations to the board, to investors, and you get a number wrong. Other than running out of cash, probably the second biggest fear for CFOs is misrepresenting numbers in an important meeting with your board investors, potential investors. So I think
Yep.
just the things that I notice a lot is people trying to twist calculations a bit. We have the traditional calculation, the traditional
Yep.
formulas for a lot of these metrics, but then they like to start excluding things.
Mm,
Let's exclude the sales ramp. And let's not count new sales hires because they're not productive yet. So I think sometimes they twist it a little bit, which is fine
sure.
if it makes sense for your business. So things, that go wrong, again, I think it's fully burdened, making sure all are in there. And sometimes they're leaving expenses out, so it's not a full picture for CAC. And then if you are going to change a metric and say take out the sales ramp, for example, that's fine. I'd still present it fully burdened, but then also your adjusted metric, and then make
Yeah.
sure you footnote it that, so you're not misleading anyone in a sort of important meeting.
Sense. I want to dig in a little bit on one of the points you just mentioned, which was sometimes that being okay, like not to misconstrue numbers or misrepresent the numbers, but to make the calculation, I guess, essentially your own, like whatever makes sense for your business. So maybe as an example, like if you're gonna say we're gonna exclude sales rep ramp as like a factor in this because they're not productive yet, when might it make sense to do that and when does it not make sense? Or is it just a factor of making sure you are upfront about what you're doing?
Yeah, I think if you're presenting to third parties that you're upfront, and how
Yep.
you're doing that, because sometimes that's the thing with SaaS metrics. We have the traditional calculations, but then sometimes we do have to change it a bit to make it more relevant to our business. So how are we manage our business? What data do we need? And, then that kind of helps you maybe change the metrics a bit to make it more valuable for your business. So I think with sales rep ramp, yeah, if you're hiring tons of quota carriers, then you're not going to know, hey, for your existing sales force, how efficient are they? you
Right.
know, until the new sales reps are ramped up. And maybe that's months down the road. So then I think it makes sense. Okay, for our underlying go to market engine, how efficient is that? Let's exclude the
Sure.
rep ramp and then calculate it with the rep ramp because that's also happening. So I think that's where it does make sense to calculate it both ways just to make sure you don't lose sight of your existing sales and marketing team and how efficient they are.
Yeah. Makes total sense to me. And I think it gets into or kind of rolls nicely into the next question I wanted to ask you, which was about how CAC calculations evolve as your company matures. Cause it sounds like it's yeah, we have the basic calculation, but
Mm.
it's kind of a moving target. If we're trying to adjust it based on what our company looks like, a seed or a series A company looks a lot different than series C or D kind of trying to get closer to IPO. So I'm
Mm.
curious like what that maturation might look like and how that calculation changes over time.
Yeah, it's a great question because it definitely does change over time. Early stage, it could just be, all right, all our sales and marketing expenses, 100% of that is going towards new customer or user
Mm,
acquisition. And that's it. Pretty simple. Align it to our sales cycle, we have a number. But then as we evolve, maybe we have different ICPs, our deal customer profiles, and we want to calculate CAC by those ICPs. Maybe we go after SMB customers or enterprise customers. We don't want aggregate CAC calculation, that'd be misleading. So there's that evolution from, all right, not just aggregate customers coming in, but now let's look at the demographics of those customers. Are they really different where we should split up CAC but by our ICP or those demographics? And then also cohort analysis, then that comes into play. Is our CAC improving with every cohort that comes in? And of course, the resulting retention. So there's definitely an evolution, and then the new versus existing split in sales and marketing spend. Now we have account managers going after existing customers and trying to expand
sure.
this customer base. So how do we split new versus existing expense towards CAC? So there definitely is that evolution and maturity in the calculation.
It's just It's always crazy to me. I mean, you are the metrics guy. It's great to talk to you about metrics. We've worked with Ray Reich as well, so I know you
Yep.
guys are the team that do your show, Metrics That Matter, or Metrics That
Monday
Measure
Night
Up. I'm
Metrics.
sorry.
Yep.
Yeah, and so I love that we could spend this much time talking just about CAC, and then it just snowballs. There's just so much that goes into it, and that's kind of why I want to roll back to where we started with CAC profile and needing the context, because, like you said, this is not a metric that basic calculation doesn't mean a lot out of context.
Mhm.
So if we're looking for the full picture of CAC performance beyond like the basic sales and marketing expenses, like what other metrics kind of couple with CAC to make that full picture of performance that you need?
Yeah, when I'm looking at that full CAC profile and the context around the company's performance, of course, CAC, the gross expenses, and then the unit cost of CAC, and then CAC payback, big fan of that. And we can calculate that both on a logo basis and also dollars coming in. It's kind of a
Interesting.
dollar-based CAC payback period as well, because we can remove some logo bias. If we have
Mm,
customers coming in at $1,000 and customers coming in at 100,000, that's still one logo coming in. So
right.
then maybe we have to look at based on dollars. And then cost of ARR, or it's called SaaS CAC ratio. And that's looking at sales and marketing spend versus the ARR that we're booking, the ARR that we're
Yep.
bringing into our business. And that can also be split new versus existing. And then there's the SaaS magic number. I know some people not fans of that. I think that's relevant for short sales cycle businesses because we're
Sure.
measuring quarter over quarter growth. Now, if you have a 12, 18-month sales cycle, I don't recommend magic. And then there's LTV to CAC. So when I talk about a CAC profile and with my clients and when I'm coaching founders, I'm looking at that set of data to see, what does it tell me what's working, what's not working within the business, and not relying just on one metric.
Love that. It sounds like this is really a cumulative effect, but maybe there's similar to magic number. You said that there are times when maybe it doesn't make the most sense. I'm curious if there are some that are more strategically relevant for tracking than others, or at the very least, like, are there other examples like magic number where if you're this kind of business, don't worry about this particular side of your CAC profile, but if you're a different kind, like really need to heavily focus on another side?
Yeah, and I think we'll talk about LTV to CAC, but I think you have
Yeah,
magic
yeah.
numbers, that example I bring up all the time, that you've got. If you're a short sales cycle, I think it's okay to look at. If you're longer, it's not going to be as relevant because the time period doesn't line up. So I
Yep.
think with the CAC profile, one thing just to be aware of, there are a lot of benchmarks out there, these aggregate benchmarks. But you've got to be careful comparing yourself to those benchmarks, because if you're $1,000 ACV company, those benchmarks are different than if your product sells for 200,000 a year on average. So just
Yep.
that's one word. Yeah, kind of just be cautious with those benchmarks. I do benchmark my clients,
Yep.
but we've got to have the appropriate benchmarks based on the profile of our business to be effective.
Yeah, no doubt. It's similar to things like surveys. I know you've done surveys
Mhm.
in the past and research reports where, yeah, I can find a stat that says 70% of CFOs believe X, Y, and Z. But if you look at the numbers, and it's like, well, those are all at Fortune 100
Mhm.
businesses, and I'm running a Series A startup. Like, I don't think we're talking apples to
Yep.
apples here. And so, similar to everything you're saying here about calculating CAC, like, you need to make sure that you're comparing apples to
Mhm.
apples, because if you're going to a board meeting and you're saying, "Oh, we're looking great," but you're looking great for a company that's 4 times the size of you, and it's just not relevant.
Yep. So same thing. That context really matters. Yep.
Yeah, absolutely. So, again, this is a CAC masterclass. I'd be remiss if I didn't try to get us a little deeper into some of these, like, seemingly simple calculations, and so some of the ones that you mentioned, the 3 that I wanna focus on: LTV to CAC, CAC payback, and CAC ratio, or SaaS CAC ratio,
Mhm.
sorry. I think those are 3 that, at least in the experience I've had on this podcast and on webinars we've done, they come up a lot as, like, I'm not gonna say controversial, but they
Mhm.
have, like, everyone has different ideas of whether or not they're relevant, and so I wanna start with LTV to CAC. I've read multiple articles, I've seen VCs come out and say something about it being something of a misleading metric. I'm curious what you think that means, if that's something you believe as well, and maybe, like, are companies relying on that too heavily as a performance metric?
Yeah, LTV to CAC is a tough one because, yeah, it's so ubiquitous. It's out there everywhere. It's expected as part of a pitch or
Yep.
depending on your stage and just part of your metrics dashboard, because LTV is very sensitive to that churn number in the denominator, and it's also gross margin adjusted, or if you use that formula. So I think when I've been in businesses that target mid-market enterprise type customers, so larger customers, it can be very difficult because you could bring someone in at 100,000 or 500,000
Hmm.
and your LTV to CAC is all over the place. So I think for those, I look at now what I'm doing, and especially early stage, if we're trying to calculate LTV to CAC and it's jumping all over the place. Now I'm doing a min, median, and max
Mm,
because if I don't feel comfortable telling one, hey, our LTV to CAC is 5, but actually really it could jump up to 12 and it could be down to 1. I can't just go with one number. So again, that context. So I think for businesses that are small price point, high volume,
yep.
self-service, some live and die by LTV to CAC, because they're putting hundreds of thousands of dollars into paid ads
Yep.
to acquire customers, and retention is pretty set. They know how long customers are staying with them. So they're constantly playing with CAC and the LTV of that customer. So I think in
Sure.
those types of businesses, really critical. I'd say for mid-market enterprise, we're calculating, we're looking at it, we're looking at that range, but we're not over rotating on it. Where some businesses, again, you do need to live and die because you're spending so much on paid acquisition.
Makes total sense to me. And I think, again, I mean, the theme here is going to be that context matters. And it just, all these things entirely depend on your business model, your pricing strategy, and everything else that goes into, what drives revenue for you. And so love kind of getting into the nuance of that one. The second one I want to talk about is CAC payback period, because you mentioned it. You talked a little bit about the two different ways you can calculate it, logo versus dollar. And we had one of our investors, John Ludig from Founders Fund on, and he's mentioned multiple times that like every investor, every VC has like a slightly different way that they expect the calculation to go. And it seems to be, as much as you can have a heated finance debate, because I don't know how heated like finance debates get. Maybe they do. I'm not in those circles all the time. But CAC payback period seems to be one where people just are not in full agreement. I'm curious how you prefer to think about CAC payback. What are maybe some of the ways that you know people do calculate it that you think are misleading or misguided? Curious how you think about it.
Yeah, I think CAC payback, one of my favorite metrics, just because we have to think about CAC, say at a high level, right? We're investing CAC and it has to pay back over time. So I view CAC like debt, so we put down this money and now it's being paid back over time. And that's
Love
why
that.
they say churn is a SaaS killer, because if you have poor retention, you're putting all this money into CAC, you're losing customers sometimes before they pay back CAC. Now you're relying on new customers to fund
Right.
both those previous and the CAC for that customer. And that's where it just snowballs. So I like to frame it up as like debt, that even if that customer churns, you still have to pay that back.
Yep.
And then also CAC ties up working capital. So if you have an inefficient go-to-market engine, you're throwing all this money into the sales and marketing machine. And if it's not being paid back efficiently, it's just there's an opportunity cost to that capital. So kind of getting into the economics of that. So thinking about like debt that ties up working capital. So we have to be very careful with it. And again, you can calculate CAC payback based on logo
Yep.
based. And then the dollar base, which I kind of like too, because then you don't have to split new versus existing. I just look at all net new AR coming into the business and how long it's taking to pay that back. And again, it eliminates some logo bias if your ASPs are all over the place. And again, some people gross margin adjust it, some
Yep.
people don't. But again, if you can get that nailed down, there's some good benchmarks out there of how long it's taking to pay back. And then we can optimize it. Where do we stand and what do we need to improve it? If it's gross margin adjusted, maybe our gross margin is low and that's having a big impact on the number. But we measure it and then look at the inputs and all right, how can we leverage this? How can we shorten the time frame?
One thing that comes to mind, I want to get to the third metric that we want to talk about, but something that comes to mind because I think you've mentioned it a couple times, or we're talking about the whole
Mhm.
time, is really the context here matters. You have to decide what makes sense for your business. A little bit of a tangent. I'm curious, how do you think, in your experience, SaaS finance leaders are dictating what's right for their business? Is it coming down from maybe investors? It's like we report on these numbers because our investors expect to see it, so that's how we look at CAC payback, or is it smarter, or is it, better to do it internally, think in only of what's best for your business and how to think about that, and then tell the board, hey, like, this is why we're looking at this and this is what it means?
Yeah, I think it's a bit of both. I
Catch
mean, I think
22.
hopefully those align together,
We
how
would
your
hope so.
investors, your board want to measure your business, and then how you are as a management team. But again, yeah, you have to have alignment there. And so I've gone through that with, say, boards and your owners of here's how we're calculating it. It's like, do you agree with that? Is that how you calculate it, say, for your portfolio companies? So I think
Yep.
there's got to be some alignment there. And if there's a metric that, is missing one way or the other, just have to understand, why are we using it? What value are we trying to get out of that metric? But definitely there must be alignment between the two stakeholders, and hopefully that aligns so you're not just producing metrics just to satisfy a third party.
Yeah, no doubt. We're going to get a little bit to that as a question, but I got to ask you about the last metric to dig into because um, for anybody maybe that's listening that has followed along with our content or Ben's content, Mosaic and Ben and Ray Reich at RevOps Squared, we did a webinar together about the SaaS performance reporting benchmark survey that we did. And one of the things that came up as an interesting point was the idea that CAC ratio is kind of like an underutilized metric. And specifically like expansion CAC ratio. So not just like CAC ratio for the business, but looking at your customer acquisition costs for expansion business. And I remember our co-founder Joe was on that and he wanted to ask a question about like, yeah, that's great in theory. We should definitely calculate that. But man, like that is a really hard thing to dig into and understand. I'm curious if you can talk us through some of the data collection analysis challenges that come along with the seemingly simple expansion CAC ratio, but obviously not as easy in practice.
Yeah, and that's the thing because you can only track so much detail in your general ledger and your accounting system.
Yep.
And the expansion CAC ratio, again, our cost of ARR, where we're just focused on the net new ARR that we're bringing into our business from existing customers. So how much is that costing in sales and marketing dollars that's just dedicated towards expansion? And sometimes it can be objective in certain cases. If we have a new business rep team, an account management team for existing customers, I use that ratio then to split sales costs. So I try to
Yep.
be objective as possible. Marketing is harder. Usually I have to talk to the marketing leader. Where are you spending your time? Let's look at your expenses. Is it easy to identify expenses that are new versus existing? And then after that, you just have to go kind of on a subjective measure
Yep.
that, all right, usually I see 70-30 splits, 70% new, 30% existing, and you have to go with that split. And again, when I do that, I make sure that's footnoted in my board deck, my
Yes.
package, because that's a really important assumption. If it's
Yeah.
50-50, 90-10, that really sways the numbers.
Yep.
So again, setup of your chart of accounts, you've got good coding for marketing expenses by your major acquisition channels. And then on the sales side, again, is there an objective measure where you can split that? And sometimes, again, you have to fall back, just maybe we just have to guess, but make sure you just put that assumption out there so people know that.
Yeah. Personally, I work in marketing, so personally, I can attest to a lot of things we do being a little more subjective
Yep.
than the direct things on the sales side. I know it's not easy in any case, but I'd imagine, chatting with marketing leaders and figuring out like what that split looks like is not an easy task, but one that, the best CFOs and best finance leaders are able to tackle. And cool to hear you kind of walk through that. So great to hear you dig into these three sort of key parts of the CAC profile. To kind of round this out,
Mhm.
I want to talk a little bit about the context mattering and analysis because, you know, tracking the metrics is only like I don't even want to say half the battle. It might be less than half the battle because it's really hard, but spitting out metrics is not enough. Like you need to be able to actually use those metrics and dig into them and understand why they're impacting the business and what you can do about it. So I'm curious, once you have your CAC profile, you understand this about a business, maybe a client, what do you do next? Like how do you analyze these numbers? Like what are you looking for in patterns to understand maybe where a business can grow strategically rather than just saying like, hey, here's our CAC and like we understand it well.
Yep. Yeah, I think, yeah, you got to actually do something with those numbers, with those metrics. So when I implement my metrics dashboard, say for clients and SaaS companies, we're looking at, all right, what's working, what's not working in our business? Does that make sense? Does it match up with the story? If I say we have poor CAC performance, does that match up with operations and what you see on the front lines? So making sure we're actually calculating these and they align with the operational story. But once we have those calculated, again, I'm always looking at the overall financial profile. What's working? What's not working? What's a
Yep.
choice? Maybe we're burning cash and EBITDA is negative. That's a choice in that metric. And then looking at the sales and marketing side in that CAC profile. All right, what does it say? Do I have a lot of green on the board? Everything's good. Do I have a lot of red on the board? And then looking into that. So why do we have a lot of red? Why are we inefficient in sales and marketing? Maybe we're early stage and it makes sense. We're trying to figure out that go to market fit. Maybe we're still figuring out product market fit and we calculate it, we monitor, but we don't put too much pressure on those metrics. But if I'm say 5, 10, 30 million ARR company, then yeah, I'm going to put a lot of pressure on those metrics if it's coming up red and we're inefficient. And then it's like understanding, is our go-to-market motion aligned with our price point? So sometimes you see, hey, we're creating this new product that's $2,000 a year, but we're building an SDR and new business rep team. That's going to be expensive. It doesn't align
Yep.
with a $2,000 price point. So talking a lot with founders around the pricing, the sales motion is an inbound, outbound combination of both, that the economics are going to make sense there. So then looking at that pricing, ICP, product roadmap, and the alignment of those three to make sure eventually the economics will work out there.
Yeah, this I'm very fortunate to work at a company where we have a lot of finance experts internally. I've been a writer for a lot of my life and not a numbers driven person. Getting a new appreciation for the work that people like you and other finance leaders do to actually uh, track all this and figure it out. I think that's probably been one of the most interesting things about having these chats with finance leaders is just any of those like few-minute spiels about how you guys look
Mm,
into what the numbers mean. So really cool to hear you talk about that. Where I want to go next is that's great. We know how to calculate our numbers. We know that we need to be looking into the why behind them. But we found at Mosaic, at least, like it's a problem that we're trying to solve is that maintaining like visibility into all of these numbers and understanding like how to pull all the data correctly. It's not easy. Like that's a main challenge for a lot of people in finance. And so I'm curious if you have any advice for people listening about how to get into a routine of data collection, cleanlier data, so you aren't always fighting an uphill battle to get these metrics correct.
yeah, yeah, definitely. I think it's one identifying what are your KPIs, what are your metrics that you need on a monthly basis. So it's not a fire drill every time or that board fire drill. Oh my gosh, we've got to calculate CAC for the board, but we don't do it on a monthly basis. So making it part of your operating routine. So what are
Yep.
those metrics and working backwards? So what systems, what software is that coming from? What reports do we need? So we can put that monthly routine in place because with SaaS metrics, it's a journey. This does not happen overnight. Maybe the
So
data
true.
isn't there, so we can't even do it. Okay, how do we fix that? Do we need to report on it differently? Do we need a proper CRM setup? So CFOs for all these metrics, we need HRIS data. We need accounting data. We need operational data to pull this together to calculate it. And that's why it makes this so hard to pull all these
Yeah.
data pieces together. So again, it's putting that monthly routine in place. What's your objective? So you can make this a systematic process each month, even if it starts in spreadsheets. Okay. All right. Then what software tool could be applicable for that? So you can make it efficient because yeah, we're data hungry in finance. We need this
Yep.
data every month as part of our routine. And again, I always say it's baby steps. It takes time.
Sure.
Don't be frustrated if in a month you don't have a complete metric set because it just doesn't happen that way.
Really like the idea of being patient, as especially in the work that we do, our target audience is VC backed startups. And
Mhm.
patience is not really the name of the game for a lot of the business. You're trying to grow at all costs. You're just really pushing hard. And um, finance has to be that kind of voice in the background saying like, hey, like we gotta, yes, we're gonna push. Yes, we need to get all this, but we need our data and we gotta take the steps now to get there, a few months down the line because it's
Yeah.
gonna take some time. Cool. So I mean, we're coming up a little bit toward the end of time. There's one question that we ask everybody that comes on that I would like to ask you, especially with all the experience that you've had in all these different companies. And it's really zooming out. So just
Mhm.
what's one thing you know now that maybe you wish you knew at the start of your finance career?
Yeah, there are two things that actually stand out here. The first is the presentation and communication of data. So important in the finance function. We get into the weeds, but then how do we effectively communicate this to our stakeholders, to our board, to our investors, to our potential investors? So a lot of time on presentation. I didn't realize how many red marks would be on my presentations early in my FP&A career to present the data in the best way so it can be consumed. Easily consumable is a big deal. And
Yep.
then I didn't realize how much time I'd spend understanding the sales and marketing machine. Thinking back to grad school, maybe you take a marketing class and you think, oh, that's kind of a softer skill, not finance, hard skill. But man, now all I do is spend time understanding sales and marketing and how that's working. You spend a lot of time with those departments.
Love it. Something that maybe in the future we can talk about if we do another episode is kind of collaborating with those teams, because that's something that comes up for our prospects, for our customers all the time. They're looking for data so they can go bring those strategic insights to those teams, but it's you're dealing with the CRM, really complex system, get good data out of that. You're dealing with marketing, which is really subjective sometimes, really hard to nail down numbers for some of that stuff like branding. So cool. Maybe a topic for another day. But for now, I want to be respectful of your time. So I want to kind of leave you with the last question for any of these kinds of events. It's your time to shine, Ben. Like, where can people go to learn more about you, learn more about, I know you do a lot of podcasts, webinars, things like that. Where can people go to find all of the stuff that you're working on?
Oh, sure. Yeah, I've got tons of free resources, templates, downloads, forecast models at thesaascfo.com, SaaSCFO.com. And then I have free video lessons and courses as well at thesaasacademy.com. So SaaSacademy.com, some free and paid courses as well. So tons of content out there if you're new to SaaS or if you're even looking to take your SaaS skills a little bit farther.
Can give the thumbs up to all of that. When I was starting writing for Mosaic a long time ago as a marketer without a finance background, all of your resources invaluable to me to understanding kind of the work that we're doing here and knowing what everybody's talking about. So appreciate just all the work that you do for the finance community. Very much appreciate you coming on, taking the time today, but I hope we can do it again sometime. And just want to say it was really great having you on the Roll Forward.
Yeah, thanks, Joe. Really appreciate it. Love diving into CAC. So it was a lot of fun.
Awesome. We'll talk soon, Ben. Thanks so much.
Thanks.
Thank you for checking out this episode of The Roll Forward. This show is powered by Mosaic, the strategic finance platform that transforms the way business gets done. If you enjoyed what you learned in this episode, make sure to follow The Roll Forward wherever you listen to your favorite podcasts. Or visit mosaic.tech/podcast to get immediate access to all of the latest episodes.